If you have any debt, mortgage, car payments, credit card debt, you're going to want to watch the next 5 minutes because I'm going to show you how to pay off your debt faster and easier using a divide and conquer method, often referred to as velocity banking. And I have to thank Mike Ross. He showed me this software that I use with my clients, and now you have access to this very software for free. And I'm going to show you the link, but let me show you how to use it. So I'm taking a real client of mine. Of course, I'm going to change their name, but I'm going to use their information and I'm going to show you how they saved over $180,000 in interest alone. All right. So we'll send you that link. You click in here to My Velocity Banking, and then you start inputting your data as well. And that's something I can help you with. So Jack and Diane, two Canadian kids, trying to do the best they can. They make half decent income. Jack actually is a consultant that has to travel for work. Like a lot of Maritimers, has to leave. He's on a rotational. And when they come back, they generally spend a lot of their income. So they came to ask me on how to help them get rid of that debt faster. Now, when you sit down with a lot of advisors, they're going to look at your assets and your liabilities. Liabilities being your debts, assets being things of value. I want you to know your major asset is you. You are your major key to success. You have the ability to be the hero, where debts are actually a villain, debts and taxes. And I'm going to show you how to defeat one of those villains right now. What I really like about this program is how visual it is. So let's go to August. One of the things that you want to do is have everything that's going over to your bank account, every expense happen at the end of the month, ideally on the 28th, and everything coming in at the beginning of the month. So you can see this family has bills coming out all different times. This is what banks do. This is what corporations do to save money, to save the interest payments, and to make more money is they have their bills always coming out at the end of the month. I recommend you to do the same. All right, so that's one of the recommendations we're going to make to them. This is a graph I'm not going to spend too much time on here. And this is where you would input your groceries or your expenses. So normal family, they have children about $1,000 a month on groceries, cell phone, a little high, cable. If you want to reduce your cable, let me know. We have internet only for $65 a month, and it is awesome. Restaurants, they eat out a little bit. Double factor. I call this your Tim Horton factor. So every time you go to Tim Hortons or McDonald's or the convenience food, as you can see, they're spending over almost $200 a month. So they're aware of that now, and they've actually reduced that quite a bit by some of the processes that we showed them. Again, normal payments, everything looks pretty fine, except for maybe clothes. They spend $900 a month on clothes and about $500 a month on entertainment. But that's a lot to do with their lifestyle. Their debts. They have a mortgage. They have 1.45, great interest rate. They have a line of credit, 40,000 on the line of credit, 65,000 availability at an interest rate of 5.45. They religiously pay down their credit cards every month. They have a car loan at 29 grand. They pay $645 a month at an interest rate of 4.47. Truck loan, 22,000 left, where they pay $575 a month at 4.99% interest. And then a camper loan at 30,000, where it's a low payment of 2,200 a month. 222 a month at an interest rate of 4.59. Now, I asked them, when do you want to get rid of this debt? And they said, as soon as possible. So what would you do if you were Jack and Diane? How would you pay this off? A lot of people say they start off with the highest interest rate, the line of credit. Is that what you would do? I'm going to show you the concept on how to pay these debts off faster. The other thing is we added some one-time expenses. They were paying their property taxes along with their mortgage. We're going to stop doing that and pay it twice a year. Keep what is yours, give to the government what is theirs when they need it, not before. All right, so we're going to save some of that stuff. And before I hit this get report button, I'm just going to head back home here and show you the divide and conquer method that saves them over $180,000. So what this is saying, if you use the velocity banking concept, you can pay off your debts that much faster. Instead of 4 years for the car, 1.8. The truck loan can be almost paid right away. Look at this camper loan. It would take them 16 years the way that they're going. They can have this done in 2.6 years. They're going to conquer that line of credit last, and then they're going to hammer down on their house, and they could be mortgage free within 10 years. So how do they do that? Well, let me move my pretty face and show you the full report. So what this recommends is using your line of credit to help fight off the other debts. Now, the line of credit's the highest interest rate, but it's also simple interest. The other loans are compounding interest, meaning you're paying interest on interest. The other thing is with the line of credit, you have access to cash as it goes down. With the others, you do not. It is a loan, so you don't have access to any money. Your money's tied up. And I guess another thing I should point out is your vehicle loans don't count the depreciation each year, which is roughly 10%. So this program is saying, listen, let's get the line of credit down, and then we're going to start chunking on your truck loan. We're going to put the additional money and focus on the truck first. And I agree with this. And one of the reasons I agree with this is because the truck is the lowest payment. When you show progress, when you tackle a debt and you see it gone, you get excited and you continue. So it's not always the biggest interest or the biggest debt that you want to go first, but it's the one that gives you that feeling, yes, I'm making progress. Then it says taking that additional $577 plus the additional money that we saved using lump sums of $2,900 every 2 months on your car. All right. So this is what the computer is programming, right? I said, listen, we could pay that truck off almost right away. Let's get the line of credit as low as we can, and then we can pay off that truck and then use the additional truck payments to pay off the car and then the line of credit as well. And then when that car is gone, you can then use additional lump sum payments to pay off that camper. And then, as you can see, that snowball effect, now you have all that free cash that was tied up here before, and that can tackle the line of credit. And then eventually that will be gone, and then you can become mortgage free. That is velocity banking. And I love this program. This is something I use for my clients and something you can use for now as well for free. I'll send you the link. I hope this helps. I hope this shows you how to use certain debts to pay off debts and helps you become that hero by defeating some of these villains. Again, if you have any questions or if you need help filling this out, I'll be happy to do so. Until then, all the best, and here's to our success. Bye-bye.